Good afternoon, everyone. Welcome to today's daily recap, Friday, January 23rd. Hope everybody had a great week. The market obviously snapping back this week. Here's the Dow, which I have up on the screen. We can take a look at the weekly as well. You can see this market is building energy. It has been a very, very interesting time. I also think it's been a very frustrating time for many traders. Many of the people that I speak to on a regular basis, just personally speaking, are definitely at a more heightened frustration level with the market because most of them are directionally inclined traders. They're looking for the market to either break out or break down. When the market acts in this type of nature where, it doesn't really have a whole lot of steady directional movement, and granted, we are kind of looking at a pocket of time here, this pocket of time going back to, the early part of December where, we have, like I said in this morning's morning call, up, down, up, down, up, down. It can be very, very frustrating because, we as traders or those that live in the short-term space typically are looking for higher highs or lower lows. And we're not getting that. You're getting a lot of back and forth movement and trades. Here's the daily of the same chart. Not really making a whole lot of directional headway beyond a stretch of 1 or 2 days. You get 2 days up, 4 days down, 3 days up, 3 days down, and it can be this, and this can go on for an indefinite amount of time. Obviously, when markets do this, typically, they're marked by, like I said this morning, a flat 21 EMA. That's this red line here, and that's what this is the Dow. This is what the Dow is basically showing us, and this is what the S&Ps. Here's the spiders, are showing us, and it can be a difficult market because many traders, and it's human nature to want to buy, to buy at highs or to be short at lows. And when that trade doesn't work and it kind of turns on a dime, whether it's up to down or down to up, it can cause a real sense of frustration, anger, hesitation. But that's the nature of the way markets move. They don't just go, markets don't just go up and up and up, and it just works, in this process. There are times where we get, the ups, and then there are times where we get the ups and the downs and the ups and the downs and the ups and the downs. It's just the nature of the way things happen. The market is, it's sometimes very easy to get caught up and be short-sighted in the sense that all you see is what's happening right now. Which is why I always think it's a healthy exercise to take a look at the weekly charts, because the weekly charts will always, layer in that sense of clarity as to what's happening overall. And when you're able to look at sort of the bigger picture, quote unquote, and then, formulate a story as to direction or what's happening overall in terms of the movement of price, it's then easy to get those emotions and that frustration under control, and then drill down to smaller time frames. And find actual opportunities, or the ability to the ability to say, the market's not giving me lemons right now. There's no reason I should look to make lemonade. I'm going to be on the sidelines. Cash is a position, and I think that's a really healthy way to approach the markets because, if your expectations are that this month is going to be the same as last month, and if trading was great last month, then this month is going to be even better. That's just not the nature of the beast. And you can't force your will on the market. The most successful traders, as I've said, several times over, are the ones that are able to get longevity. The ones that get longevity are the ones that are able to take a step back, evaluate the landscape, and make decisions about risk. Risk being, hey, this is a time where I want to have a lot of risk on the table and a time to look to push the envelope, or a time to say, I need to be in cash here because the market's just not giving me, like I said, lemons. How can I expect to make lemonade? And that's just, I think, a very, simplistic but healthy way to evaluate, markets. This is a story that will continue to unfold. It's not like we're in the final chapter here. The market's going to continue to trade every day for the unforeseen amount of weeks, years, long after I'm gone, and long after you're gone as well. So we can't expect to just have it all happen in one fell swoop. And, I am getting a sense of a lot of frustration out there with the current market. Now, as we are in earnings season, it is a stock-specific trade. On the heels of Netflix, I think this kind of woke up some of the the big cap, momentum names. We saw a big, snapback in Google. We saw a nice pop in Amazon. So it kind of brought some of these names that kind of been lingering and truthfully really, really performing quite poorly and making lower lows. It kind of just, injected a little life into them. Now, some of these stocks have yet to report earnings. So, I wouldn't get too caught up in a 2 or 3 day pop. But you did see some of that this week as stocks, kind of caught people here at the lows and then, turned from that point on. So I would say that, if you are one of those that you're saying, Laz, you're right, this is frustrating for me, and I get it. I've been on the receiving end of that, many times in my career, as that's, part of trading. Slow it down, lower your risk, take lesser position size, look to do less, have some patience. Patience, like I said, is a pivotal part of being a trader and making money. Especially when you're engaged in the market day in and day out. That's really the best piece of advice that I can give going into the weekend. As we look at the market, like I said, in this morning call, at some point this will sort itself out. This market will tell us where it wants to go and will give us a clearer sense, and we'll see a big surge in volume, and the engine will start to roar again, and whether it's up or down, again, give it time to develop. I wouldn't go chasing highs. When you have a flat 21 EMA here, I definitely don't want this to be in yellow. When you have a flat 21 EMA here, the last thing you want to do is chase a market at prior highs, whether it's whether we see up here or whether we see down here. You don't want to be the trader that's, buying up here, and you don't want to be the trader that's necessarily shorting down here. And it's easy to say after the fact, and I'm certainly not trying to be a Monday morning quarterback or someone that's looking in the rearview mirror, but I will tell you that you don't need to be the first one in a trade to make money. You don't even need to be the second one. If a trade is going to go higher and be a good trade, it's going to give you an opportunity to get involved, and it'll have a healthy pullback, and it'll break out again. The same thing on the downside. If a stock's going to go lower, it's going to break down, it's going to have a volume surge, and it'll have bounces at which there'll be opportunities to engage on the short side. It'll be very, very clear. If it's not clear and you find yourself trading it anyway, chances are you're not going to get the results you desire. So that's my 2 cents for the overall market. Obviously, the things that I mentioned today in the morning call, TLTs back, still in this consolidation, but popped a little bit today. Gold pulling back, but not really selling off by any stretch. So we could be consolidating for higher here. I would give these trades some time to really develop. The overall market, again, still very back and forth. Banks, here's the XLF. Banks really not performing. Again, market sitting close to highs. Banks have made lower lows, and over the last couple of weeks, banks have underperformed. So. I know there's a lot of different opinions and things that are going on in this marketplace about oil and the ECB and news and all these different headlines. Again, focus on where opportunity is. Try not to get caught up in the nonsense, and look to build a sound game plan. And if that game plan is, hey, you know what, I'm getting a lot of cross currents here. I don't really have good tailwind behind my back in terms of a trend or opportunity. Then sit on the sidelines and be okay with that, because, like I said, it's so hard sometimes for the active trading crowd to recognize that not doing anything is actually the most profitable scenario you can do, or trade you can be in. But for some, it's just a hard thing to get their hands around. So just kind of, I would say think about that over the weekend and look at what you're doing and where you're at, and think about it for 5 minutes. All right, everybody, have a nice weekend. And as always, I'm Laz. Take care.